Let's be honest for a moment. The 2.5% to 3% interest rates that we saw during COVID were the anomaly, not the standard. And at some point, we have got to stop waiting for something that is not coming back and start making smart home buying and selling decisions based on the reality that we are in now. You may be reading headlines about what the 2026 real estate market will look like nationally. But what matters isn't what's happening nationally, it's what's happening right here in Brevard County. And in many cases, those numbers will be different. So let's take a look at last year and think about what it's going to look like this year. Last year was harder for sellers than most people expected, and that caught a lot of homeowners off guard. Many sellers went into 2025 thinking prices would just keep climbing the way they had been, and instead the market pushed back. Buyers became more selective. Homes that weren't priced or prepared correctly sat longer, and that was frustrating for a lot of people. But here's the important part. That wasn't a market crash, it was a reset. So what's a reset? In our area, that meant that buyers regained decision power. They stopped bidding emotionally and started evaluating value again. Sellers lost automatic leverage. Homes no longer sold simply because they got listed and put on the market. And pricing became grounded in reality. Not every home could command peak pricing without condition, updates, or really good strategy. And the time on market normalized. Days on market increased, not as a warning sign, but as a return to balance. The market relearned discipline. Good homes still sold. Poorly positioned ones did not. When we look specifically at standard residential sales, not foreclosures or short sales, a few things really stand out, especially when you compare the fourth quarter to earlier in 2025. In the fourth quarter, sales activity picked up meaningfully compared to the same time the previous year. Pending sales also increased, which matters because pending sales tells us where the market is going, not where it's been. And what's just as important, what didn't change. Inventory stayed under 4 months. That tells us that demand did not disappear, it simply adjusted. Earlier in the year, pricing felt really choppy. Buyers were cautious, sellers were still testing the market, and prices flattened in some segments. And by the fourth quarter, though, we started to see some real stabilization. And in December specifically, prices even moved back up, better than the year before. So that combination of stronger fourth quarter sales, rising pending activity, and still limited inventory is why expectations for 2026 look very different than they did this time last year. It didn't point to a market racing ahead, it points to a market that has found its footing. Interest rates are where I really want to be clear. Rates in the 2s and 3s were never normal. They were a once-in-a-lifetime response to a global crisis. Rates in the low 6s, that's historically normal. And more importantly, they're workable. When rates stay at or below this range, buyers stop waiting and start doing the math again. And that's exactly what we're seeing locally. It's not a bad time to buy. It's a very realistic time to buy. For sellers, the message has changed, and this is important. This market no longer rewards optimism. It rewards precision. Pricing has got to be right. Condition matters. Strategy matters. But when those things are done well, homes are still selling and selling well. This isn't 2022, but it's also not a market to fear. It's a market that expects professionalism and people that are being realistic. For buyers, here's what I want you to hear. Waiting is no longer improving your leverage the way it did last year. Inventory is not going to balloon, and prices falling across the board are not going to happen. And competition quietly returns first on the best homes. That doesn't mean rush, it means prepare. Buyers who understand the market and act with intention are in a very good position right now. This video is about the broader landscape, and that landscape supports thoughtful, confident decisions going into 2026. Could we see modest price growth? Yes, very possibly. Could sales volume increase if rates stay near where they are? That's what many indicators suggest. But my job is not to predict what's coming. My job is to help buyers and sellers understand how to move within it intelligently. The takeaway is simple. This market is not broken. It's just no longer inflated. And it rewards people who approach it with clarity instead of emotion. If you're thinking about buying, selling, or even just planning on your next move, I'm happy to talk strategy with you. No pressure, just honest guidance. Because the right move isn't about timing the market, it's about understanding it. My name is Lee Johnson with Brownfield Real Estate Group. Give me a call. Let's talk it through and see if now isn't the right time for you, whether you're buying or selling.